Hey, it's Mark with an update for subscribers to my newsletter, Crypto is Easy. If you are not subscribed, click the link in the description below, head on over, and if you like what you see, please go ahead and sign up for the newsletter. You can also subscribe to this YouTube video. I don't post very often, but when I do, you'll be the first to get it. Well, I wanted to address, so I've been talking about $29,000 as a really important line, a level. I guess I want to just elaborate on that just a little bit. The difference between $29,000 and that red line, the line in the sand that I have in my plan for Bitcoin's bull market. And if the price trends below $29,000, does that change my plan? Does it change my perspective and what I'm doing? And I'll put it this way. For the price to just drop below 29,000 then pop back up, no problem. Day 2, 3 days later, we're up and fine. Wouldn't worry me at all. In fact, that's what I would expect if we dropped down below $29,000, because you can see there's a stack of buy orders around 30,000, 29, upper 20s, even heading a little bit lower. Just a stack of buy orders ready to buy up any drop. The problem is if we trend below it, that would really concern me. That would make me question my analysis of the market and the data that I use, which is not order books, although it's kind of interesting to see that, but it's the on-chain metrics and those shifts in momentum and those patterns of behavior that we see play out time and time again over Bitcoin's history, and those signals of strength where the market is really laying a foundation for a leg up rather than weakening to the point where you would expect, if anything, it's going to go down. And that's really the foundation of my plan. The other part is backtesting and looking at what are the specific lines that we can use as our focal points to understand when is the opportunity to buy as opposed to lay low and just let the market go up. Obviously, if the price moves in a way that invalidates all the research that I've done, the analysis that I provide, the plan and everything, that would force me to really reflect and reassess and question really my attitude, my approach, and my analysis of the market. And it would certainly force me to turn from bullish and seeing all these similarities between these consolidation periods we have in the middle of larger uptrends. And I'd have to say, look, this is a bear market, and change my whole expectation and my frame of reference for what we can expect over the coming years. So I hope that doesn't happen. Never going to rule out any possibility. This market, you see the calls. The calls are for us to fill a $9,600 CME gap. And the calls are for us, we're going to go up to $288,000 in this amazing, blast off supernova like we did in the end of 2013. And when you're talking about a market where those are the range of expectations, dropping another 10%, it's totally within the realm of possibility. And I do think it is possible that we drop down. I don't think it's unrealistic to expect that we would go below $29,000, but I would be very surprised if we don't go back up very quickly. I think it's also just as realistic that we kind of either mosey along sideways or start to trend up a little bit. And so because those seem to be realistic outcomes, because they fit into the analysis that I do, the data that I look at, the information that I share with premium subscribers, that's my expectation right now. Obviously, if the data changes and if those expectations don't play out, I need to really reflect and reassess what I'm doing. So that's all I'm saying about the $29,000. But as far as buying, selling, all this, I follow the plan until further notice. And for us to trend down below $29,000, that remains an incredible investment opportunity. It just changes the expectations for how that might play out, the range of expectations and realistic outcomes that we can expect if that happens. And then if you have the plan, there's a line in the sand. And right now it's about $14,000, but that line keeps going up. That is separate from what I'm talking about with the $29,000 area, where that is the very lowest price that that would allow me to stay in the market. Because when Bitcoin goes below that price and trends below that price, and that, or really it's a line, it's not a price, and that line, because that line's going to keep moving up for a few years, and if the price doesn't go back up pretty quickly within 2-3 days and stay above that line, that basically invalidates my investment thesis, and you can see that investment thesis linked below. And so, once my investment thesis is invalidated, once the facts show me that my assumptions about why Bitcoin and cryptocurrency in general is a great way to build and grow wealth for my family over the long run, once that's invalidated, you have to sell. You have to get out. You have to find some other place for your money. I don't think that's going to happen. That would shock me if it happens, especially if it happens anytime soon. But, you can't be too complacent. Complacency kills. So it's all about being alert and aware and appreciating the wide range of outcomes that are possible, including going down to that red line in the sand. But for right now, we're nowhere near there. We're not even near $29,000. We're at $32,000 and change. I think we're in $32,800 or something. So there's really nothing to worry about right now. Does that mean there couldn't be something to worry about soon? Yeah, sure. Who knows? Or this thing turns around and it's all gravy. We'll just have to take the market as it comes. I'm still following my plan. $29,000 is just that zone. I've talked about that in the stuff I publish. I talked about that in the updates to subscribers. Long story short, there's a massive amount of accumulation at that level. There are a whole stack of buying orders below it that should serve as a nice floor for price. And the on-chain data, the movements of Bitcoin suggest that the same patterns that we see now, when we've seen them in the past, have led to prices basically kind of evening out and going up, not going down and trending down. So you take that all together, to put that all together, right? It's not one thing or one fractal or a little similarity. It's just all that all together suggests that there's not much more to go down and the upside is still infinite. And that's basically the underpinning of my approach right now and my attitude and the message that I've been articulating and the information that I've been sharing. Long story short, I hope it continues that way. We'll just have to see. But nothing to worry about right now. Nothing to worry about right now. Relax and enjoy the ride.